Hello traders, and welcome back to another episode of weekly watchlist video. What a week we had so far. It all started with a pullback and ended up with a bigger drawdown in the market across the board. Honestly, I was not expecting this type of price action, as I was expecting another rally after Jackson Hole meeting. Now yesterday Powell spoke for 10 minutes or 8 minutes I guess, but he projected more rate hikes, more hawkishness and pain in the market. Market took all of that negatively and caused a sell-off. Now I'm not sure if I want to believe in this pullback, but if you look at the overall trend, then the market clearly broke the uptrend that started from the 16th June. And as I draw this line, if you can draw another line from this point onward, like yeah, you can, it makes sense. You can make an argument that uptrend is not broken yet. It might retest, come back to this low level of 12,300 and then bounce back. But considering the seriousness of the sell-off that we saw yesterday in the market across the board, I'm 50-50 about it. Like, I'm not sure what's going to happen next. Now, based on the Elliott wave theory, this can be a correctional wave that might cover the fourth wave of the bigger wave that was forming since 16th July. But as I said just now, considering the seriousness that we saw yesterday with the sell-off, it might possible that market cannot give us that wave 4 and ultimately fail that wave, Elliott wave formation. So the only thing we can do here is wait and watch for the next few days to see development of the price action. And that's a brief summary of what happened during the week. But now let's get started with our watch list. Starting with the Nasdaq pullback almost like a 10% so far from its recent high of where we crossed 13,800. We couldn't reach to 14,000 level. This was the main channel that you can see in between these two trend lines, and we clearly broke that on Friday. Now right now we are at 12,559, and I was expecting it to hold this level as a support, which comes around like 12,701, but that didn't happen. It broke through it, and right now we are heading towards this lower support zone of 12,375 and 12,259. Now if the trend lines are, if the technical analysis makes sense and if it holds its value, then probably we might see a bounce back from this level close to 12,375. That might happen going into this week. Probably, let's say around Tuesday, Friday, we might see a slight bounce back. That will be a dead cat bounce. But at this moment, I clearly feel that we broke the uptrend. Even with this 5-wave Elliott wave theories, like this is a wave 1, 2, 3, and let's say we get a bigger wave 4, which is unusual considering the fourth wave is usually the half of this first wave. But let's say if we get a bounce back from here, then that bounce back might not be as powerful as we expected in the first place, and we might see a retest of this previous trend line somewhere around like 13,200 or something like that. So that's the overall picture that I'm seeing here with Nasdaq. Also, I have these 4 moving averages. Orange one is 10 period, red one is 21, and the purple one is 40 period moving average. And there is another purple line which is white, but the latest one is showing here in a purple color. It's a 200-day moving average, and you see that we clearly broke that 200-day moving average right over here. So this is the point that I was talking about. I was expecting it to hold, but market clearly broke through it. Nasdaq couldn't even hold that level. It just broke through it clearly. Now if we get a dead cat bounce, we might try to push back up towards this 200-day moving average and retest it again, and we need to see like what going to happen. Either we are going to break above it, or we get a clear rejection coming back down, and if that happen, then it will basically defines the clear downtrend that begins from 16th August. Moving on to S&P 500, looking very much similar to Nasdaq and barely hanging on to 4,000 level. In this case, a dead cat bounce, if we get a dead cat bounce of any sort, similar to Nasdaq, we have this another channel which brings you back towards this 3,992 level, which is very close from where we at right now. So expect a dead cat bounce from here. It's also broke through this 200-day moving average, so we might get a bounce back up from 3,987 or around like 3,921. So right now I'm watching this 2 level for a bounce back, but that bounce back will be a short-lived based on the price action that we have over here, as we clearly broke the uptrend. So just keep an eye on this 2 level and let's see what happens next. I was talking about the wicks for last couple of videos, and I mentioned in my last few of videos that it is forming this bottoming pattern. It was consolidating right over here, and I was expecting a breakout. Now my initial target was around like 24. It clearly broke through it. It nearly touched to 26, but at this point, like, it is getting this kind of like a rejection from this 26 point, which is quite interesting. Now if we get slight pullback going into Monday and Tuesday, then we might see a dead cat bounce earlier in the market rather than expecting it towards the later of the week around like Wednesday and Thursday. But it clearly broke through all the moving averages, like 10, 21, 40 moving averages. Also it broke through this 200-day moving average. So what you can expect is, like, let's say if we get another push high, then probably we will retest this 27 and then it will come back down towards this moving averages. In case of VIX, we broke through it clearly and far away from this 10 period moving average, 10, 21 and 40 period moving average. So expect a pullback in the VIX, and if that happens, then we might see another push on the up towards the upside in the stock market. And when that will happen, we have to see, but I'm expecting probably towards the early days or the middle of the week. Dollar index, the dollar is flagging once again, and it could push towards the 110, which will add more fuel to the selling pressure across the market. And it is very close to its moving averages, so probably if we get a pullback, then it will retest this trend line of this flag, upper trend line of this flag, and then bounce back towards 109, 110. So that will cause more pain in the market. Moving on to Apple. Now Apple was heavily on the both Nasdaq and S&P 500. So when it drops more than 5% in a day, it brings some serious pain in the market. Now Apple's sell-off was non-stop, and to be honest, like, as Powell was speaking, it was pushing up, and when it started pulling down, I didn't expect it to drop almost like a $10 in a single day. Apple dropped from around like 170, 171 to 162, which is quite astonishing considering the uptrend that we had. I mean, we were expecting some kind of like a pullback, but not this type of pullback. Now with Apple, the levels to watch for the 162.37 and 160.36. There is a small gap to fill between 159 to 157. If it couldn't hold this 160 level, then it will quickly come back down, fill this gap, and at that point probably it will catch up with this 200-day moving average and get a bounce back from there. Amazon is retesting this 130 level, and this was the previously drawn level from my chart. I didn't change it. As you can see here, we are in the middle of the gap fill, so we filled it kind of like 10-15%. And as you guys can see here, we have this 200-day moving average just lurking beneath it. So what it indicates? It indicates that it can probably gravitate towards the 200-day moving average, which will bring us close to 125 level. If you look at this price level very closely, we have this previous resistance turning into support. So 125 will be the clear target for Amazon. Coinbase is forming this nice falling wedge, which is kind of like a bullish, but and also all this moving averages are above it, so we might get a push back towards this 10-period moving average, which is nearly hanging close to its price action. So levels to watch for are the 62.82 and 57.51, because this 62 level was the previous resistance. We broke through it once here, retested, hangs around, consolidated over that price, like close to that price, broke through it, and if we can retest it again, then that would be a better, that would give us a slight bounce back towards this 10-period moving average. So in the short term, we can expect a slight pullback and then a bounce towards the upside for a shorter period of time. Technically, CVS is in a downtrend, and as similar to Amazon, it has this 200-day moving average below it. So watch for this 98.92, 98.18 level. If we broke below 98, then we will fill this gap, which is between 97 to 96. Microsoft broke down along with the Apple. Similar to Apple, it weighs heavily on both indices. It is currently below its 200-day moving average, and it is right where it's supposed to be, around like 268.15 and 266.98. So this is the level where it can find a support and bounce back to retest 200-period moving average close to 270 support zone. Otherwise, it will come back down to retest its previous lows, which will be close to 250. Netflix got a clear rejection when it started filling this gap. It tried to enter into the gap fill, but couldn't even able to do that. Among with Amazon and CVS, it has this 200-period moving average just hanging below its current price, so expect it to retest this 217, and if we broke below that, then we have this huge box where it hanged from around like 11th May to 20th June in this box. So if it break below 205, we will enter into this box once again. Probably will hang out there for a while. NVDA is kind of like losing all its gain after they reported their earnings and a future projection of slowing demand and all those things. What you can expect with NVIDIA's price action is like watch for the hold of 160. If it couldn't hold, then it will come back down below 160, filling this gap towards 157, and that's the primary target. As of now, it is below all of its moving average, including 200-period moving average, so it's super bearish. Even if it bounce back, it will probably retest this 10-period moving average around like 168, 165, and probably break down even further. It's now had a nice gap up on its earning, but that gap up happened at the wrong time and market started selling off. I bought a put option for 170 strike right over here, right at its peak, and when Powell was speaking, as it started pushing up and up and up, I was kind of like scared, and I thought like this rally will continue, and I closed my position, which was a stupidity as based on what happened next. But apart from that, watch for this level of 194. It is just above all three moving average, so there is a high probability that it will come back somewhere around like 178, 175. At that point, it will retest this 10-period moving average, and it will catch up with its 10 period moving average and probably get a bounce back right up to 184, 185. And last but not least is Tesla. After split, Tesla's price action was kind of like a choppy. It's still in this box, which is not a good for Tesla's price action, for the Tesla's movement. Also, it is forming this symmetrical triangle, so it can broke in either direction. But considering the overall market sentiment, which is bearish, I'm expecting it to retest this 271 level, where it will meet its 200 period moving average and probably get a bounce back up right towards 286. So that's it for this video, guys. Thanks for watching once again, and see you guys in the next video. Bye.